What's up, guys? Welcome back to DCA. So what we're going to do in this video is talk about Cardano. So Cardano is an asset which has historically got crushed in the bear markets. So we saw back in 2018, the asset go from around $1.40 all the way down to below 2 cents. So, nearly a 99% loss for Cardano. Now, we obviously had a massive return, especially if you were someone who was buying in the bear market during the 2018 into 2019 and eventually 2020 bear market, before we kicked off going from 2 cents all the way up till around 316. All right, so nearly an 18,000% return in this last market cycle. Now, in this market cycle, we've seen Cardano yet again do miserably in the bear market, going from 316 all the way down to 22 cents. So now we're sitting at around 59 cents. So in this video, we're going to be doing a price analysis of Cardano, but in the next video, we're going to take a look at Cardano by using statistical analysis and machine learning algorithm models in order to determine what is a reasonable and fair expectation for this asset in the upcoming market cycle. So with that said, guys, let's do it. So this is the first chart I want to look at, and I think this chart is so important. Now, let me just say this. When people look at these charts, we're looking at ADA Bitcoin here now. So one of the things I notice is people often will look at something like ADA BTC, but they're looking at USD values. I think that's not a great way to look at this type of metric for Bitcoin and Ethereum in relation to altcoins. You have to remember that oftentimes, and Cardano is not necessarily as big of an offender in this respect as a lot of altcoins are. But a lot of time these altcoins have a much higher inflation rate than Bitcoin and Ethereum do. So when you're comparing USD prices and looking for support and resistance zones with respect to the USD price, it's oftentimes going to miss the mark by a lot because of the new increase in circulating supply of the altcoin. So you have to look at the market cap. And, just looking at the Bitcoin price here, so ADA BTC, we're looking at market caps. You can see that we are at a critical level right now. In fact, you'll notice that we got bounced right off of this 0.026 level. Well, let's look back historically. This has been an important level for Cardano with relation to Bitcoin since its existence. So all the way back here to 2018, you'll notice that this level we get through, it becomes a support level. So we hold it as support here in 2018. We fall below here as the bear market is progressing, right? As the bear market's really taking a toll on a lot of the altcoins, then it becomes a resistance zone. So we bounce off of it in 2019 when the market was trying to rally. We came back up, and you'll notice that when we did get above it, it took a giant wick to get above. And that's how these support and resistance levels, especially the longer term ones, will often play out. It will take a dramatic price move in order to get either above or below. So when you come below, you'll typically tend to crash below significantly. So we got above. It took a few weeks, but we bounced off of this level multiple times as support in February once that bull market really got going. Then we held this level as support once the bear market was starting to unfold in May. A lot of these companies were starting to default at this time. Then we held it as support again in December, but then eventually we couldn't hold on. We fell through in March of 2023. Okay. You'll notice that we came back up multiple times. We tried to get above, but we got bounced off of it in April all the way through May. And then we eventually crashed down in June of 2023. Okay. This is all with respect to Bitcoin. Now you'll notice that we came up and we got bounced right at that level. Okay. But if we really want to see the asset go parabolic, you're going to need to get above some of these major resistance zones. Okay. And so this is probably one of the most significant resistance zones with respect to Bitcoin against Cardano. All right. And obviously Bitcoin is the market driver. So if we came and we got bounced at this level right now, the asset may need to cool off a bit before we come up and challenge it again. But with all that said, let's take a look at the USD support and resistance zones. So what we're looking at here is the volume profile visible range. This is a metric that I love to use. I've been using this quite a bit on my channel. It tends to be highly prognostic of what the asset is going to do. So the way that we use this metric, These areas on the horizontal axis that come out farther, these are going to be areas where there has been a significant amount of volume traded. All right. So you'll see at like $1.20, all right, at around 90 cents, at 45 cents, and then down here at around 35 up to around 40 cents. These are areas where you're typically going to have a high number of holders. All right. So these are called high volume nodes or high volume zones. So when you come into the opposite region, right, like right in this blue area that I have marked off, these are called low volume nodes. And these are significant because you tend to explode through these zones. They tend to be vacuums. Now, just like we said, you tend to explode through them, you can also tend to get bounced off of them right as you're coming to, kind of just entering into them. So these are important levels to watch, because once you do get into these zones, you tend to quickly move through either way, up or down, as the market gets going. So we were actually watching this one back in 2022, kind of towards the beginning of the bear market. I was saying that, we have these higher volume zones here. So this is an area we want to watch, because if we lose this 80-cent zone, you're quickly going to see ourselves crash back down. And sure enough, that's what happened. We fell right through that level and we crashed down. All right, so where are we at now? Well, you'll notice that we recently just got above this 45-cent zone, and that was a significant resistance area, right? Not a huge resistance zone, but there was a fair bit of resistance there. And what happened right when we got above that? That is why we exploded and we got all the way up to around 65 cents. So we are sitting in this vacuum region now, this low volume node right here. So where does that peak out at? And that is at around 80 cents. So this is a critical level that we're going to want to watch, that 80 cents level. And it's ultimately all going to come down to whether the market continues to rally or not. If Bitcoin were to go straight up to 50K, and that is going to be a potential major resistance zone for Bitcoin, and we got bounced there, Cardano may get up to this 80 or 90 cent zone. But then, if you take a look, this is where we have this next resistance area. So I expect that if the market continues in a positive direction, we are going to get up to this 90-cent zone. And that's going to be our first challenge. Now, there's not going to be a ton of volume at this 90-cent zone, or a ton of resistance, very likely. But once you get to this level right here, so we're talking around $1.10 to up to around $1.50, this is going to be a massive resistance area. Because if you think back to the bull market, a lot of people were FOMOing into the asset at that time. We have a huge number of holders now that are sitting underwater. And this is why they act as support and resistance zones. Because when you come to these levels where you have a large number of holders that are underwater, you'll tend to find that selling occurs at those zones, right? Because people are just happy to get back to their cost basis. They want to get out of a trade that they've been deeply underwater on. And, if you were sitting in Cardano, it's not the worst case scenario here, but if you were sitting in Cardano at the time, from the middle of the zone down to the lows, you were down around 82%. So these people were deeply underwater on this trade. And this is why you meet resistance at these levels. So this is what I'm watching for. Right now, I expect that if the market continues in a positive direction, we quickly go through this zone up to around the 80 to 90 cents level. From there, we have some resistance at around 90 cents, but it's not heavy resistance. But once we get up to that $1.10 level, or, maybe even less, maybe even $1.05, you're going to have a challenge there. And it's all going to depend on how fervent the mania phase of the market is. So if we are, really in a true bull market, in a true mania phase of the market, you guys know how it is. We explode right through these resistance zones. But even so, I expect that even if the bull market were to really kick off, once we got up to this level, we'd probably hit at least one significant area of correction there, probably at each one of these zones. And the reason that is you just have to shake out these people that, don't have longer term conviction and are going to likely, sell just to get out at their cost basis or taking profits at those levels. And the reason that we want to know this is because if you're interested in acquiring more of the asset, these help for market timing. These help us to understand what the challenges that we have ahead are. All right. The bottom line is, ahead of us, we have this 90 cents level, and then around $1.05 up to around $1.50 is going to be heavy resistance. But below us, if we experienced a large correction right now, you would be looking at around 45 cents as a major support zone. Below that, you have a huge support zone at around 40 cents. But we are due for a correction in this market, and that's just the bottom line. The market has been moving up for a few months now, and it's moved up significantly. So this isn't just going to continue indefinitely. There has to be a large correction at some point, and I'm expecting that it's probably going to come sooner than later. So knowing where we could be looking for support, and that's at 45 cents and 40 cents, I think is going to be important. From there, I think if we do continue upwards, I think going up to 80 cents is just, a matter of time. If this market were to really continue rallying, I think, we're there within a matter of days, right? Before we start to hit some of these challenging price levels. So the last thing I want to show you is this. So this is the site I run with Mark over at Upside Down Data. This is polaritydigital.io. We have a host of risk metrics on the site that we offer. This is a risk metric which tells you when an asset has run too far too fast and likely needs to correct, and when an asset is oversold and is likely preparing for a large run to the upside. So this is our short-term risk metric. We actually have risk metrics for short-term, which are days to weeks, then a medium term, which are weeks to months, and then finally a months to years, which is essentially going to be a metric that is looking at entire market cycles, telling you where a market cycle top is at. So right now you'll notice that we are sitting at around 0.06. So the scale is 5 down to -5. So when you're up at 5, that is telling you that, hey, this asset has gone way too far, way too fast, and we need to correct from there. When we're down at -5, these are going to tend to be your best times to buy. So you'll notice this is color coded here. When we're down in these blue zones, that is saying that, hey, the market has, we're probably oversold here and we have room to go to the upside. Once we start to get into these yellow and then eventually orange and red regions, that's when you're in like that 2 to 3 up to, approaching 4 and eventually 5. Once you're in those zones, you'll notice that those are where the market tops tend to occur, right? So right now we are sitting at around a 0.6. So we're less than 1. So that indicates that, yeah, we've gone up quite a bit so far, but this market for Cardano still has a long way to go. We could continue to see a significant run from here. So, what that's telling us is that's how we get above this 0.026 level. We could get above this 0.026 level because Cardano still has a lot of room to run in this market. We want to see Bitcoin continue to run. Confirming with our risk metric, we know that we still have upside potential here. So you can think of it as being how much upside left in the market exists, right? It doesn't mean you'll necessarily achieve all of that upside, but how much is potentially left in the market right now. So when we're sitting at less than 1, that tells us that, hey, this market still has room to go. So that's what we're watching right now. The bottom line is we are in this zone right here. 80 cents is almost a given if the market continues positive. If we correct, I'm looking at 45 cents and then a much higher support zone down at around 40 cents. Above us, 90 cents is going to be a price challenge. And then above that, we're looking at around $1.05. It's a grind all the way up to $1.50. Once we get above that $1.50 zone, I think we're off to the races. That's how you're going to see Cardano take out this prior all-time high rather quickly. So that's going to be it for this one, guys. Until next time, as usual, see ya.